You've probably walked back inside from your mailbox with a frown on your face and a strange letter from your insurance company talking about something needing to be fixed or a non-renewal or them no longer offering coverage in your area. Today we're going to talk about why homeowners policies get non-renewed. And there are several reasons and some fundamental understandings that you're going to need to have as a Florida homeowners insurance consumer. Homeowners insurance policies can be non-renewed for several reasons. The most common of which is exposure management. What does that mean? Well, every insurance company has to review its portfolio periodically and look at what they call maximum probable loss. It literally boils down to they insure too many homes in your zip code or even in your neighborhood or on your street. As a matter of fact, in my neighborhood at one point, we thought, hey, we've got this company that's really good on houses built in the 1980s, and let's talk to all of our neighbors. And once we got past 3 policies, we actually got a call from underwriting, stop writing so many houses on the same street. And that can boil down to windstorm. It can boil down to one house catches fire and then 2 do and then 3 do, and you see the domino effect. But insurance companies are built to distribute risk over large samples. So that means a lot of policyholders and a lot of geography. So if they see themselves becoming too densely represented in a small area, they will take measures to spread that risk out so that if disaster does strike, it's not going to be completely catastrophic to their ability to pay your claims. Another reason, speaking of paying claims, is money. After all, insurance is not altruism. You are contractually transferring your financial risk to the insurance company. That's what a policy does. It literally says if the worst happens, the insurance company will pay instead of you. But you will pay the insurance company what we refer to academically as a known loss, or the price of your insurance policy, the premium, to guarantee that if something really outrageous happens, you won't have to pay any more. Maybe a deductible or something like that, but the insurance company will bear the brunt of the disaster, the transfer of risk. So, many Florida homeowners insurance companies that operate only here in the state or regionally don't have the financial strength of the Fortune 500 companies that you're used to seeing regular TV commercials for. So what do? They buy a lot of reinsurance. It means they're financially leveraged. It means that if a hurricane comes through and causes $1 billion in damage, that insurance company may only really be exposed for as little as $1 or $2 million. They turn around and do what's called cede your policy to a reinsurer. They pay a premium to the reinsurer, just like you pay a premium to them, and the reinsurer accepts risk above a certain level. Remember that $1 or $2 million? Once they hit that stopgap, what really happens is they turn around, file a claim with the reinsurer, who cuts them a check, and then they cut you a check. So they have a significant cost of that reinsurance, but that financial leverage keeps the system running so that Floridians can buy homeowners insurance from these domestic companies. It doesn't mean they're bad, it doesn't mean they're underfunded. What it means is, and we've talked about this extensively in some other episodes, please check out the entirety of our YouTube channel. Because of the regulatory environment here in the state of Florida and because of our state legislature's refusal to act appropriately towards the insurance market, we're left with a largely domestic market. A lot of our national players, some of whom have returned recently, just don't want to do business here. And it's not because of sinkholes or hurricanes. It's because of our elected representatives, specifically in the state Senate in Tallahassee, although the issues are pervasive throughout the entire system of state government when it comes to being dealt with appropriately. Insurance companies are completely within their legal ability if they're going to drop you or non-renew your policy, so long as they follow state regulations, which typically center around how much notice they give you. Can they call you today and tell you they're dropping you tomorrow? Typically, no. The one exception to that might be something called material misrepresentation. So remember that application you filled out when you first bought your insurance, or that I as an agent helped you fill out? And do you remember when I asked you if you'd ever had a bankruptcy in the last 7 years and you said no, because it had been 6.5? Unfortunately, in a nasty claim situation or a true disaster situation, the insurance company might actually investigate the answers on that application. Remember, an insurance policy is a legal contract, and that application is a part of that contract. Material misrepresentation means that you weren't fully truthful or honest about something, even if you did just forget, on that application. It then gives the company the right to deny a claim or even flat cancel your policy back to inception. That means today it's 2020. If you had a material misrep on your application in 2017, they could actually cancel that policy back to 2017 and refund you those 3 years worth of premium. Otherwise, there are very, very specific amounts of time or notice that an insurance company must give you if they're going to issue a non-renewal for your policy. It can range, depending upon circumstance, between 30 to as much as 90 days, but typically we see 45 or 60 as what most often actually happens in compliance with statute in the real world. So depending upon why you're being non-renewed, you're going to get advance notice and you're going to be given opportunity to replace coverage. The reason that the regulator or the Office of Insurance Regulation creates those rules is just for that reason, so that you have the lead time to get with your agent, go to market, and replace your coverage without having to do so all in the last few minutes. So the most common reasons that would cause a homeowner to be non-renewed are financially driven, such as reinsurance costs skyrocketing, or a reinsurer telling an insurance company, you've got too many homes in the, to use our zip code right here at Harry Levine Insurance, 32819 zip code, you've got to get rid of a quarter of them. Well, the insurance company is going to turn around and use some analytics and pick the 25% of their portfolio in this zip code here to issue non-renewals for. Another would be underwriting eligibility. If a company sees that homes that are over 20 years, for example, are starting to present a clear trend of claims of a certain ilk for whatever reason, they might decide that they want to purge their portfolio of that kind of risk because it's becoming too predictable and too costly. Remember, insurance ultimately is predicated upon being able to predict loss, but it should be sudden and accidental. When you start seeing a recurrent trend, there's usually something else going on there, and it's not just randomly breaking pipes. It could be a number of things, and I'm not saying it's anything nefarious, but it could be there needs to be maintenance done on a certain system at a certain age, and people have a proclivity to not do it. And that creates a situation where insurance is not designed to provide that maintenance when something fails. Insurance is designed to protect against the unforeseen when you as a homeowner have taken full pride of ownership, properly maintained your dwelling, and then something bad happens. So when they see trends like that, that's another reason. It could also be any of a number of things that go back into how the company wants to position itself, where they find themselves to be the most successful in the marketplace, et cetera, et cetera. Reinsurance is really, really one of the biggest here in Florida. And there's a thing called predictive modeling. And every year, the major reinsurers who mostly are based, we see a lot in Bermuda, London, Germany, and believe it or not, the Minneapolis, Minnesota area here in the States, a few other places around the world, but it's a very small business community. They run these models that experts do create, and it might say that it really, really seems like there's a heightened risk in St. Lucie County. So all of a sudden, the cost to reinsure homes in St. Lucie County quintuples. So the insurance company then has to find a way to cover that reinsurance cost. And let's say they go to the state and say, our cost is going to go up by a factor of 7 because our reinsurance is going up by a factor of 5 and we still need to cover costs. And the state says, because remember, Office of Insurance Regulation has to approve most rate filings. So insurance company pricing is not arbitrary. It's reviewed and approved by the state. If the state says no, the company might say, well, then we can't play in that sandbox. We can't write homes in St. Lucie County this year, or this reinsurance buy cycle, which is typically 12 months, typically runs June to June. So there are a number of reasons. It all boils down essentially to loss trends, so where they see a weakness in a portfolio. That could be for a plethora of reasons. And no, folks, it's not, oh, I had a claim, now they're going to get rid of me. It's truly not that. It's for some reason we see that in homes that have a 15-year-old shingle roof or a 21-year-old plumbing system or something like that, preventative maintenance is needed. They're all breaking en masse, and it's going to harm the company's ability to pay your claim. So what they're saying is we need to get off of these risks. We need to get them out of our portfolio because they disable us from helping other people. And in fact, and nobody likes hearing this, but in fact, sometimes you've just got to take proactive maintenance measures. It's tough on the budget, but it's part of homeownership. And there are certain things you can look at all kinds of best practice standards, whether it's how often a water heater should be replaced, or when a home should be replumbed or rewired, or what's the expected age of your roof where it's going to need replacement. And that's a thing, there's a huge fallacy when it comes to roofing. And this is critical, and I try to help people understand this. But I hear it all the time. Well, my shingles have a 50-year warranty, so don't tell me I need a new roof after 15 or 20 years. Well, that's a 50-year workmanship warranty. That's not a 50-year, your roof is in the hot, the cold, the sun, the shade, the elements of Florida, which can often range from below freezing to over 100 degrees. That is not a wear and tear warranty. It's a workmanship warranty. The truth of the matter is your shingle roof basically starts to die somewhere around 10 years old, no matter how good it is. And somewhere between 15 and 20, the vast majority of shingle roofs have lived out their expected lifespan and need to be replaced. Tile roofs, that number jumps to between 20 and 30 years. Same thing, I have a tile roof on my home, 50-year warranty on the tile. That roof's not gonna last 50 years. It's gonna last between 20 and 30. And that's why when people enter into homeownership, they really need to get with a team of advisors that includes an insurance agent, includes a banker, includes a financial planner, who can start to budget for these items that are gonna pop up over your experience as a homeowner. The reason for the non-renewal is gonna matter. We mentioned material misrep. If you have a prior application that doesn't have all of the questions answered correctly, and again, we're talking about, I hesitate to say that a lie was told or put forth, but ultimately something that devolves into material misrep, that has to be disclosed and you could have trouble. But if you're just being non-renewed because company A has too much exposure in the 32819 zip code, here we are in 32819 at Harry Levine Insurance, you will have a letter that states the reason. And when you go to get replacement coverage, they will ask, have you been canceled or non-renewed in the last however many years? Each one's a little bit different. Typically, it's either 3 years or 5 years is the question. And if the answer is yes, it's going to be explain. And if it's exposure management, here's my letter from my carrier, it's typically, okay, no problem. If it's something like, well, the house burnt down and we had to rebuild it, well, a hyperbole like that, you're probably going to be fine. But I had a $50,000 plumbing line break, water flooding my living room issue, then you're going to have to prove repairs, prove that the home was replumbed, probably even provide a 4-point inspection or a plumbing inspection, whatever, specific to that issue. But once you have that documentation in place, it's usually no sweat. Don't cry in your soup. That there are going to be opportunities to replace coverage. Understand that it may be time to perform some maintenance on your home. There are a number of reasons for being dropped by your insurer. Most of the common ones, though, are going to either go back to the insurance company's portfolio management, in which case you're probably good to go, or some element of your home that statistically is proven to need a little tender loving care. So give it that tender loving care, prevent that water pipe from breaking, don't wait for it to break, and you should be fine. I'd like to thank you for spending a few moments with us and remind you that we've got some great content coming up next. Stay tuned.